Hi everyone, and welcome to a special edition of Mish's Market Minute Premium end of day video. Today is April 10th, 2012, Tuesday. My name is Michelle Schneider and I am the Director of Trading Education and Research for MarketGauge.com. We're going to start by going over the overall market, some thoughts on where we're at, look at a couple of group in sectors, and then my subscribers will get picks for tomorrow. So let's start first of all with the S&P 500 because you can see obviously we have RSIs here at 1.28. We are officially oversold. So what do we look for at this particular time? I did tweet today at one point that we must remember that if we look at the beginning of 2012 until today, we are still up about 8% year to date. Now, are we in a bullish phase? At this point, we use a 50-day moving average to gauge it, and you can see that we are actually below the 50 for one day today, which means we are in an unconfirmed warning phase. The second thing that I like to look at is whether or not the slope on that 50-day moving average is positive, negative, or neutral. And when I measured the slope, I saw it was indeed still positive. So this tells me that we are in a one-day unconfirmed weak warning phase. Finally, the next thing we look at is volume. Now we had a couple of interesting volume indicators with some distribution days over the last couple of weeks as we were approaching these highs. I had been writing about the fact that we were making new highs and closing on intraday lows. It happened a couple of times. Then finally with the inside day and the gap lower, that was the clue to get at least out of longs, although many people were still hesitating about going short. Now we have a huge distribution day in volume, which could mean one of two things. Could mean that we see a rally up to the 50-day moving average. We fail up there. It's another good short opportunity. As we know, when we saw things overbought, things that are oversold can continue to get oversold. Scenario number two is that we digest for a few days after this distribution day in volume, and then we start to see things turn around. Maybe pivots get positive, maybe we clear resistant areas, maybe at that point we clear 50-day moving average and we go back up. How far we go back up, of course, remains to be seen. Scenario number three is that tomorrow we immediately go back up over the 50-day moving average. So at this point, obviously a cash position, especially now that we've entered earnings seasons and already right out of the gate, we had Alcoa with positive earnings and we do have signals from the Fed last week. We're in an economic recovery, albeit a weak recovery. One bad number last week, of course, was just the impetus that we needed along with some fear of rising rates to sell off, but that doesn't mean that we are done necessarily. Now, of course, the Russell 2000 was our first clue. It always is our first clue. It wasn't the first time. Back in this area right here, I had sent out a warning. It was time to get out of it longs. We saw a correction. Then we got back in. Then again, it was the first one here that made new highs, closed on intraday lows. And we've been in a confirmed warning phase with a negative slope on the 50-day moving average. So even though we're oversold, and even though I'm sure if we look at the volume bars here, we're going to see a big spike in volume today, this is an exponential moving average that we're holding. So the question again is going to be, will we sell off further from here? If I had to put my money on it, I would say doubtful. Could we rally? Absolutely. But the question is going to be, how far do we rally? Unless we do something really miraculous like close above here and leave another possible island bottom, I would say we could rally all the way up to this resistance here up at around 82. And then proceed to sell off. But that's still a nice rally from here. So keep your eyes open for opportunities. Finally, we have to look at the Qs, Nasdaq, which has been the leader. Now again, we had had several times since the beginning of 2012 where we saw these ominous looking candles, new 60-day high, close on the low, and then it proceeded to shake it off. This time we had three tops. I have written, if you look at past issues, of what tops look like, and we've mentioned quite a few scenarios. So this one turned out to be three times at overhead resistance, with the inability to get through it and a weaker close intraday. And of course you can see now what's happening. This one is not quite oversold, number one. Number two is we do have now a declining 10-day moving average. Certainly it would have been a signal to get out of your stuff a couple of days ago. And we still have a very upward sloping 50-day moving average that's underneath. So once again, we have a little gap here we could fill, which by the time it happens could coincide with the 50-day moving average and oversold conditions. And certainly at that particular point, I would feel the way I feel about S&P 500 right now, which is it's very possible we'll see the bounce. But for the nearer term, 66.76 was a number that we were watching for. It was the low of yesterday and some support from a couple of weeks ago. If it clears through there, we could see a little bit of a run. Again, the question is going to be, do we get through this fast moving average? And if not, if we start to roll over, do we have more on the downside? And these are the diversions of the market. So right now, best money may not be in the leading stock, especially as we have earnings coming up in Google and Apple. But I would be looking at some of those beat up stocks as I showed you, either in the mid cap, small cap, or in the S&P 500. Jumping ahead to some of the sectors, retail, which of course was something that we really caught huge move up as we began 2012, had the first indication with that pattern where it made new highs up here and then closed on the intraday low. So we started to see warnings at that point too. If you recall, it was very overbought. Now we have just the opposite. We are oversold. We have broken down under the 50-day moving average. The slope on that 50-day moving average is still positive, so we have entered, just like the S&P 500, an unconfirmed weak warning phase. We would need a second close. And we've got some support coming in here at this exponential moving average. So very similar scenario. Oversold, not a great short at this point. Could we possibly buy? Yes. What we'd be looking for is a pop. At this point now, we're going to start to say that these 10-day moving averages that have negatively sloped will serve as initial resistance. And of course, with this type of pattern right here, there is questions about how long they last. But at this point, with oversold conditions, I would say the possibility of this market continuing on up to new highs right now seems extremely slim. Now we have to look at XLF, because this is where, for me, the whole year started. Even though we liked retail, and we liked biotechnology, which we'll take a look at, and we were friendly to semiconductors, it was the financials that had a 5-year downturn, which turned around as we began the year. And especially, if you go to the weekly charts, you start to see that it broke out over a very significant weekly moving average. So now here happened, we started 2012, we got our breakout here over 14, and we've been really looking at buying the dips ever since. So the question is, what happens here? We did indeed get a similar situation as I just showed you in retail, with a new high up here at 1601 and a close that day near the intraday low. So that was a definite warning signal, and then we broke the fast moving average when we couldn't get quite back through. Clearly it was showing signs of fatigue, and also it was overbought. Again, the opposite. We're oversold right here in an unconfirmed weak warning phase. Although I will say that I just looked at the slope on this 50-day moving average, and it's actually starting to turn down. So we'll call it an official unconfirmed warning phase. And in this particular case, since 15 was a number that I was looking at, as well as 1470, I think it is important to consult the weekly chart, because you can see not only did we have the 65 weekly cross over the 200 weekly, but we had those two closes here back a few weeks ago, which showed the reversal of the trend, since it had been 5 years since we closed over that. So is it possible that we sell all the way down to retest that weekly breakout? Absolutely. That would be about 1450, let's call it, in between 1448 and 1458. Am I somewhat concerned about the slope on this 200 weekly moving average as negative along with the 65 weekly? Yes. So I would say that it's certainly within reason to expect a possibility of this going down to the 1450. The question is going to be whether or not that means that it will be the buy opportunity. And of course, with the RSI's very oversold right now, first time down it would be the buy opportunity. If we want to branch out and spread out for a little bit of a longer term view, the question is going to be whether or not that's a buy opportunity for for people to hold on to. And you can see that regardless of what happened in the weekly and the daily, we never quite made it to a reversal in the monthly. Thought perhaps that's where we would go if the market had stayed firm. This is why flexibility is so important. Didn't quite happen that way. And now that 1450 level, which is down here, becomes significant, but you can see we sure have support on the way down. So bottom line is this. At this point, maybe I'd be willing to catch a bounce, but it would be a bounce. It would not be for a longer term buy and hold or even for a long-term swing trade. It would be more of a day to a mini swing type trade. And unless things really turn around here and we start crossing back over these 10-day moving averages, I would say at this point we should be a seller of rallies if we don't want to be a buyer here on a short-term basis of these oversold conditions. And if we go across, I mean, the other one we absolutely have to look at is biotech. It was finance, it was biotech, it was retail that was the most promising as we started the year. And you can see, same thing. Now this one, to me, of all the places to go, this is the only one thus far from all the sectors and groups other than energy and oils and golds and silvers, which we'll look at gold anyway in a moment, that did not have an ominous reversal candle. All it did was make new highs. It didn't close on intraday low, and now of course we're seeing the correction. It was again overbought up here. So if we look at the slope on that 50-day moving average, it is still pointing up, so we have our weak warning phase. We're also, look at this, we still have support down here from the lows that we made after we corrected back in February and early March, and that is about 116. So I don't know if we'll get down to 116. We're oversold. We're not as hammered as we are in some of the other groups we looked at. But if I were going to go anywhere for the best chance of a full recovery, and I'm going to say the best chance. At this point, I'd say any chance of a full recovery from these prices seems unlikely, but at least a nice move back up to test up here at around 22. I would say the biotech and some, of course, those stocks have held up relatively well. Final look would be at gold, which has sort of a head and shoulders type top forming here. But you know, gold is an interesting metal. I mean, it looked like it was going to collapse today, but we do know from classic trading is that when the market starts to tank, people often turn to gold for a flight to quality and a flight for safety, and that is exactly what happened. So it closed up. It closed up above the fast moving average, but still below all of these moving averages right here. I would still have to say that any move that we could get up anywhere near the 200-day moving average would be probably a really good short opportunity. At this point right here, just based on the type of action that we like to see, with 3 days of positive pivots now and moves that are above resistance levels, any dips that hold around that 159.50 probably initially would be more of a buy opportunity. But again, we're talking more day to mini swing trading and not long-term position trading. The longer term trend in gold on the 65 weekly is still up. The question is, can we really get through these levels, which would be 165, before we would say this could actually possibly take another leg up. Right now, in this whole level here, between 155 and 165, I'd say lots of noise. Ending with a look at the Energy Spider ETF as it broke down for 2 days now under the 200-day moving average, but is extremely oversold. This becomes an important line of demarcation, so keep your eyes on this for either a rally with more weakness if it can't clear it, or a cross through, and a possibility of a bounce in the energy sector, many of which have stocks that have been extremely beat up. Okay, that's it for now. You all have a great evening, afternoon. Thanks for watching, and bye for now.